I was exposed to that violent world at a very early age, and I normalized it. So, growing up, I saw people get stabbed, get shot, and killed in front of me. We had race riots at my high school twice when I was in high school. So that was just a normal part of life. So when that happened, it was me and my friend were just hanging out in the street. I was an early teen, and it was about 5, 6 o'clock, dusk, and then this guy just comes walking down the street, and then he's clearly like on drugs. His eyes are just kind of glazed over, and then he just decides to put a gun to my head and say, "Hey, if I pull the trigger, you're not going to feel anything. It's just going to go dark." That was kind of his pitch to me.
Hi, everybody. Good afternoon. This is Joseluiz Morales. Welcome back to the Morales Group Show. This is episode number 52. We got a special guest. His name is Carlos Delherra. Super inspiring story. Somebody that went from absolutely nothing and now close to a $100 million real estate portfolio. Welcome to the show, Carlos. How are you?
Thank you. I'm doing great. Happy to be here.
Good, man. So what I was telling you behind the scenes is I'm super motivated or inspired by your story, man. I think that it's always good to see somebody, man, that comes from absolutely nothing and then is able to do something great like you have. So congratulations on that. Thank you.
Yeah, it's been a fun ride, and there's a long way to go still, but it's been great. Thank you.
That's awesome, man. So if I ask you, like, who is Carlos Delherra, how would you describe yourself, and what would you say?
Well, I would say a lot of it obviously starts with the roots, right? I was born and raised in Compton to immigrant parents from Mexico, grew up poor, right? And just was born in that environment and just kind of had to figure it out, and through a lot of hard work, there's always luck involved, as you know, was able to get enough breaks to kind of get me to where I am, and really find a passion that I love to do, which is real estate, and was fortunate enough to start a business a little over 10 years ago and grow it to where we were. And honestly, it's something that I come into work every day, and I love what I do. So
that's awesome.
And I'm also a family man. I'm married, happily married. I have a couple kids, 8-year-old girl and a 4-year-old boy. So that's obviously that's what gets me up in the morning, of course. And I would say that captures me pretty well. Yeah.
That's awesome, man. Good for you. Let me ask you this, like, growing up in that type of environment, man, it's like, I would imagine that that the percentage of people that get to the level where you're at is a pretty small percentage. Obviously, I wouldn't know an exact percentage, but what would you attribute that to? Like what type of mindset would you need to have in order to grow up in that type of environment? Or what were your thoughts back then?
Yeah, Jose, that's an excellent question. I get asked this once in a while, and I think my answer is always different. But you grow up, and I always kind of joke with people, like my parents. They came here as immigrants, and they could have landed anywhere in the U.S. Right? Yeah, my dad was in the Bracero programs. There was a farm worker. That's how he started in this country. And of all the places, it landed in Compton, right, which at the time was really one of the dangerous places in this country. So I always kind of looked at that as an unfortunate event, but now I look back at it, and again, this is kind of the mindset thing, right? I look at it as one of the best things that's ever happened to me, right? Because if you can survive the streets of a place like that and the environment like that, where really the odds are against you, right? If you can get through that, then life in a way becomes easier, because it doesn't get tougher than just trying to navigate through those streets and the violence and the terrible school system, right? So you have all these pitfalls that you have to navigate through, but if you get through them, then you're tougher, you're built tougher, more resilient. So I think when I was a kid, it was really just, honestly, I hated being poor. and that drove me a lot in a positive way, right? I just wanted to get away, and I wanted to get as far away from Compton as I could, as quickly as I could. I definitely felt that poverty deep down when I was a kid, and that, I just used that as fuel, as motivation to get me out of there. So I think a lot of the people that I grew up around, unfortunately, had a different mindset where, the victim mentality, like, hey, we're screwed, like the system rigged us, and in some cases it's true, but it's really how you look at that, and just realize that those things, you could either use those things to hurt you and set you back more, or you can use those things to help you to navigate your way out of there, right? And I just, at an early age, I realized, look, people get out of here, right? So there's people who leave the hood all the time, so you've got to figure out how they do it. And I used to say, don't hate, participate, right? I remember saying that when I was a kid. It's just like, just find a way to participate and try to get out and learn, because there's a formula out there, right? And I just try to think like that as a kid.
Yeah. Were you ever tempted to get into that lifestyle? Because I know growing up as a kid, I mean, you go through different phases in life. I know the person that I am now is completely different than the person I was when I was like 13 or 15. Like, did you ever like get tempted or like have the wrong friends, and maybe like somebody pulled your ear and said, hey, look, don't go that way, go this way, or something like that? Did that ever happen to you?
Yeah, I think, look, that environment and gangs and drugs and all that's definitely surrounding you when you grow up in that neighborhood, and you see it. I don't think I was ever attracted to that lifestyle. It wasn't for me. I mean, to me, leaving poverty was always like at the top of my thoughts, the foremost important thing, that goal that I wanted to accomplish. And going back to that formula, like I knew like that lifestyle, like the gangs lifestyle and drugs, like I saw how those people ended up. I mean, I grew up really in the house that I grew up was in the back of a home, and then there were people who were involved in gangs there. So I saw it every day. I mean, I saw that lifestyle, and it didn't attract me. I saw the violence and the drugs, so it was front and center for me. It was almost like watching a movie, right? Yeah. And you didn't like the ending. I knew what that ending was going to be like. So it didn't. But at the same time, I had a good family values. Like my parents, they had their great educations, right? But they had strong values like go to work, be a good person, just very basic fundamental values that I think that they instilled in us that really can take you a long way, right? So that's what I would say.
Models essentially at home, basically, that like kind of set a good path for you and a good vision as to how to do it. At what age did you realize you were poor, and how would you describe poor? Like, are we talking about like no food to eat? Are we talking about like living paycheck to paycheck? And would you say that poor is more of a mentality than an actual thing? Or would you say that, That's
a good question. I would say, look, I've been at kind of different ends of the spectrum in my life, right? And, on the poor side, I asked myself, am I happier now than I was then? I was a happy kid. I'm not going to say, hey, look, I was unhappy, but the poverty we had was like, my dad never made more than minimum wage. My mom was a homemaker. He was kind of that machista, like, hey, woman stays at home. And, we benefited from that, having a mother at home, of course. But we got, it was paycheck to paycheck, right? We lived in the shack, right? Had the basic lifestyle, really. We ate beans and rice a lot, right? And we didn't have a lot of toys growing up. But look, go outside and play. We didn't have iPhones, right? But you go out and play, and you're happy, right? And so we had that benefit. So it was more the financial thing, but I definitely felt it because, again, as a kid, I didn't get the nice clothes. Like my brother and I we had like 3 pairs of jeans. You know, he wore one on Monday, I wore that one the next day, and we just, you know, we went to second, right? So we just didn't have we just didn't, we didn't live like a nice lifestyle. We didn't have the material things, I guess you would say, that other people had. And but I realized it when I was with some cousins, and I was probably like 7 or 8 years old, and one of my younger cousins asked me, "Why are you poor?" Right? And I think it was maybe the first time in my life I didn't know how to answer a question, and it just made me really feel poor, and that's when, and you know, it didn't bother me too much. I didn't have all the material things. It was more like the way in society, I felt this powerlessness, right? I went to terrible schools. We didn't know how to navigate the system, things like that, that I definitely sensed as a kid that I didn't like and I wanted to change.
Awesome. Let me ask you a question. Let's say that there's a kid out there who's growing up in Compton, maybe going down the wrong footsteps, maybe hanging around with the wrong people. Maybe he's even witnessed a couple things, man, or not even Compton, like let's say even a different location. What advice would you give to somebody like that, basically to maybe help them out?
I think what I would tell them is, like, it's not going to be easy. The odds are stacked against you, but I think you have to, you know, try to find the positive in your life, try to find the role models. And just like there's negative, there's positive, right? It's like sometimes it's this mentality, like how you see things, right? But I think if you know, there's a term in the Bible, and it's just like, seek and you shall find, right? I think if you're looking to get out, if you're looking for something, if you're putting that energy out there, I think those things will come into your life when you need them. I think you attract them by your thoughts. So I would say, if you just have kind of that positive mindset, and you deep down, if you got to know what your why is, right? Why you want to get out and what's important to you. And I think if you have that and your eyes are open and your mind is open, you know, I think a lot of people miss those opportunities or that help that come along the way because they're not open like that. So I think if they keep that optimism, I was always an optimistic kid. It's like, I'm going to figure this out and I will die trying. You know, that was kind of my mentality. And I think if you have that, like, I'm going to get out here, I'm going to die trying, right? There's a very simple analogy that Jim Rohn, one of my mentors, used to say, is like, you're going to have that ant mentality, right? If you look at ants, they're in a straight line. They're so focused. They have a goal they're going to, whether it's get food or wherever. If you try to block them, they will go around you, go over you. You have to kill them to stop them from going to where they want to go. So you got to have that type of mentality growing up. And I think if you do that, you know, you will find the help that you need along the way to get you there, because you can't do it by yourself.
Yeah. So I think maybe what I noticed was, one, personal development as well too. Maybe like picking up a couple of books that like begin to change the way that the person actually thinks. And then number two is perspective, you know, as well too. Like either thinking like, hey, look, the system rigged us, or being a realist and knowing, okay, the odds are stacked against me. I'm not going to fall victim to this. I'm going to do what I have to do to basically get out of this. At some point, you were able to transition out as well too. At some point, you basically left Compton. You went to university, right? Was that like your first time outside of Compton and actually seeing like that there was a completely different world outside of Compton? And what was the importance of that exposure in your life?
Yeah, I think success, I would say, is like 80% kind of mentality. You know, it's kind of psychology, mentality, philosophy is kind of what I would say. So, and that stuff, you know, you can find it in books, you can find it in seminars. I spent hundreds of thousands of dollars on, well, tens of thousands of dollars on like personal development, right? And every day I'm constantly like feeding my mind and shaping my outlook and my mentality. So I've invested a lot in my mind. That's why I say like it's 80%, you know, how you think.
Yeah.
So I definitely think that, and luckily today you have that readily available. You can get all these free podcasts. You can get books really cheap on Amazon, right? So that stuff is out there. So there's no reason why anyone can get that, and you don't need a lot of resources for it. So I think from that perspective, people have an advantage now. But to go back to your other question, yeah, I think growing up in an environment like Compton, we didn't have money to travel, so that was my world. I thought the entire world was like violent and had terrible schools. I didn't know any better, right? I thought you can walk down the street and people put guns to your head. I thought that was just part of life that everyone went through, right? Yeah, and that happened. That happened to me. But so yeah, when I went to Berkeley, it opened up a whole different world for me, and I realized that just the possibilities that were out there. And then I also realized, like, look, the kids that are going to these schools, they're no better. We're all humans, right? And one of the best pieces of advice that a teacher gave me in high school was, and this is in the book I co-authored, was, look, if you got to outwork someone, if they're twice as smart as you, and there's always going to be people that are smarter than you, then just you got to work twice as hard, right? So I went in with that mentality, and that's what helped me, because a lot of times, when I went to Berkeley, these kids, they went to the best schools, they had the best resources, and they were just miles ahead of me when I got there. But I was like, okay, well, I just got to put in the work. I got to work twice as hard, and that's what allowed me to kind of get ahead. But yeah, I think it just opened up the whole new world of possibilities that were out there for me.
Out there. Yeah. I have the same philosophy, just so you know, Carlos. Like, I don't consider myself like the brightest, smartest person, but I basically am grateful for my parents that gave me like a very strong work ethic and basically taught me to work from a very early age, man. And I mean, to get where I've gone in real estate, obviously it's not to the level that you, but I basically attribute a lot of it to just having a strong work ethic. Let me ask you this, man. You brought up something that I forgot to like kind of mention. At some point, like you had a gun to your head, like somebody put a gun to your head, and I remember you telling me that you kind of talked yourself out of it. Like, what got you in that situation to where you have a gun in your head, and how did you get out of it? And then what was going through your mind at that time? Like what were you scared? Were you like yeah.
Well, yeah. Again, it's in the book, but the crazy thing about that situation is that I went back home. I didn't tell my parents. I don't remember losing any sleep about it. So it goes back to how normal that world became. How you normalize it, and you're just like, well, this is just. But I think what happened is, I mean, my earliest memory was, my neighbors again that were in gangs. They shot their mother at midnight. They come running into our house. So I think I was exposed to that violent world at a very early age, and I normalized it. So, growing up, I saw people get stabbed, get shot, and killed in front of me. We had race riots at my high school twice when I was in high school. So that was just a normal part of life. So when that happened, it was me and my friend. We were just hanging out in the street. I was an early teen, and it was about 5, 6 o'clock, dusk, and then this guy just comes walking down the street, and then he's clearly like on drugs. His eyes are just kind of glazed over, and then he just decided to put a gun to my head and say, hey, if I pull the trigger, you're not going to feel anything. It's just going to go dark. That was kind of his pitch to me. And I just knew, like at that point, just instinct, it's like fight or flight kind of thing, right? And I knew that I had a reason with him at a very basic level, because he wasn't, in his right state of mind. And I mean, I think part of it is I've always just been kind of a calm guy. I have a very even demeanor, right? So I stayed really calm, and I just said, hey, like, it's not worth shooting me. It's just not worth it. Like, what? You're not going to get anything from shooting me. That was kind of the way I tried to reason with him. And eventually he just kind of walked away. But, that could have been I would have been page 3 somewhere in a footnote of another kid gets killed in the ghetto, right? Because that happened all the time.
Yeah, that's crazy. All right, so let's get into the real estate portion of it. So essentially, I kind of noticed 2 phases, or there's pre-2008 and after 2008. So what did your real estate portfolio look like before 2008? And what were some of the lessons that you learned there? And how did you kind of shift from maybe that investment strategy to after 2008?
Sure. So what happened is when I left college, I went into management consulting. So I had a very nice corporate job, making good money. I was traveling the world. And then someone handed me that little purple book called Rich Dad Poor Dad. And I think if you're in real estate and you haven't read this book, then you really need to read this book, right? By Robert Kiyosaki.
A game changer.
So yeah, total game changer. So that was really transformative in terms of how I saw real estate. And again, this goes back to I was like, this is something that is simple. It's not easy because again, it takes work, but I wasn't scared of the work. I can, again, as we talked about, the work is the easy part for us because we've been doing it all our lives, right? But it was a simple strategy to follow. And I just love all the tax benefits. And I love just the whole idea of getting out of the rat race, right? Trying to create financial independence. It just resonated with me. And I said, this is what I had to do. So that was around 2000, 2001. So I started buying real estate, and really my goal was just try to accumulate as much real estate as I could buy. And if you remember that time, you didn't even have, you just needed a pulse to get a loan, right? It was like, they just checked if you're alive and okay, we'll give you 100% financing. So unfortunately, I was able to buy quite a bit, like a few $1 million in real estate. And my strategy was equity appreciation, right? So my thinking was, look, if I have $1 million of real estate and it appreciates 5% a year, that's $50,000 that I'm wealthier, right? Yeah, equity on paper. And I was like, great. So if I do 2 million, then 5% is 100,000. That sounds like a great plan, right? So my strategy was equity appreciation. So eventually I bought about, it's just under between $3 and $5 million of real estate in like 3 states. And I was like, this is great. I'm on my way, right? And
we're going up like this.
It's just going up. And then you look at it, it's like these GameStop, right, investors. It looks great on paper, right? But it's just on paper, and there's a lot of hot air beneath that, right? And as you know, it's hard to cash flow in California. I think you got to find the right niches to cash flow, and I'll get to that point later. But so if I could get a property where I just broke even on it, I was happy with that, right? So I amassed a nice size portfolio, and then 2008 happened, right? Mortgage meltdown, real estate just crashes. And now that I look back at it, I realized I was part of kind of that herd mentality, right? I had a group, I surrounded myself with a group of people who all thought that, hey, this ride's never going to end, right? The equity ride's never going to end. It's good. Real estate has never crashed before. This is going to be fine. But if you step away from it now, and hindsight's 2020, right? It's like you can't keep inflating a bubble and an asset where there's nothing behind it, right? There has to be income behind it. There has to be something of value behind it. And it was just a lot of hot air, basically. And we thought that the ride was going to go on forever. So I think it was like that groupthink mentality. And that's one thing I caution people. So essentially what happened is that I woke up one day and my net worth was like negative $500,000, right? On paper, I was just like upside down. It was just like getting hit by like this tidal wave and just not knowing what happened, not seeing it coming. So I had no idea that we were going to crash so bad. I think most people didn't, right? And so I remember sitting there with she was my fiance at the time, and I was just like, I don't know what happened. Like this is crazy. And And so, but here's the difference with me was like, I didn't give up on real estate. I was still like, this is how I'm going to build wealth one way or another. And I just fell off the horse and just kind of dusted myself off. And everybody was running from real estate, but I was like, no, I'm going to get back in the game and I'm going to figure it out. And that's when kind of things changed for me.
Yeah. Were your properties cash flow? You were breaking out even on most of your properties. Did tenants stop paying rent at that point, and then completely you were like in the complete negative, like on the mortgage, or how did that end up playing out? Just out of curiosity.
Sure. Well, I had a few properties. There was one in Vegas, a condo that I had where definitely we couldn't even lease it out. You know, Vegas got hit hard.
Big time.
We can find a tenant, so we're negative cash flowing. I bought another deal that was, again, it's more speculation, right? Speculation. That's why I'm not a big stock market guy, because I don't speculate anymore. And there was a lot of speculation going on. So we bought this condo hotel on the Vegas Strip, part of the city center development, and we couldn't get financing for it. So basically we said, hey, just give us half of our deposit back and, call it a day. And so I had some other investors in that. So we lost like half of our capital on that one. I had another property in Texas. In Texas, what happened was I had a tenant came in, destroyed the property. And so I had a lot of CapEx repairs, right? So just a combination of things. In California, it was more like I was breaking even. And at some point, you just decide like, and then if your property's worth several $100,000 less than what you paid for it, and again, because we had 100% financing, for example, in a property a triplex that I bought in Silver Lake, then it's like, I'm going to spend the next 5 years trying to get back to even. It didn't make sense. So I made a decision to either sell or foreclose or short sell pretty much everything. I just decided to wipe everything clean and start over.
Beginning.
Yeah.
Funny, Carlos, I tell people all the time, like when the market is good, man, everybody is a genius, meaning that everybody's strategy works. But when the market goes bad, that's really when you find out like, okay, which strategies work and which strategies don't work. And some people like to speculate, some people like to think that the market will go up forever, that sort of thing. But I was lucky enough that I got involved with Robert Kiyosaki early on as well too. And I read books. My old broker had me play a game, and it was called the Getting Out of the Rat Race or something like that. And it was basically about buying cash flowing properties till it basically offset all your personal investments, and then you were basically out of the rat race. And then from that point on, you could basically it helped you with freedom and all that. Okay, and then so you wiped the slate clean. You ended up getting into a niche, right? At some point, what niche did you end up getting to, and what was your strategy behind getting into that niche?
Sure. Well, interesting you brought up Robert Kiyosaki, because he was one of the guys that actually I stopped listening to. I read his book and I stopped listening to, and I got in with a group who was more equity appreciation type strategy. And they're great. They're great. I still follow them to this day. But, Robert, if I had been listening to Robert at the time, I would have known better and followed more of a cash flow strategy from day one. And so that's what I started listening to Robert Kiyosaki, and I was like, that just makes sense. And so my strategy overnight went to like, if my property is not cash flowing day one, I'm not buying into it, right? And then I also got smart about reserving for CapEx, right? So repairs that happen, unexpected repairs, things like that, right? Where I think in the past you try to make a deal happen so bad, you want it so bad that maybe you'll try to ignore certain numbers that are not gonna make it pencil off for you, right? Yeah. So I got tighter with my numbers, right? And at the end of the day, do the numbers, and the numbers tell you what to do, right? So I got just more diligent with the numbers and making sure that it needs the cash flow. I need to have a cushion there, etc. And the good thing is that because I decided to stick with real estate, I started looking at properties, and for the first time in California in like a decade, right? Things were cash flow, and I was like, oh my god, like this is great. Like things are on sale now, right? So I said, I'm gonna double down. I mean, this is the perfect time to get back into real estate.
Yeah.
And fortunately, that's when I met my current business partner, George Alva, and he had kind of stumbled into this niche at USC, which is student housing, right? And he found a deal, and he said, hey, look at my numbers. And I looked at them, and I was kind of scratching my head because I couldn't believe how good they were, because before that, I was ready to start buying property, and I would be happy with a couple $100 of cash flow every month. I'm like, I'm good. I was ready to get into it for the long haul. I was like, you know what? $200 a property, it might take me 10 years, but hey, I'm in this for the long term, and I'm willing to kind of put the work in. And I already had kind of a delayed gratification mentality, right? So I'm like, it's good. I'm just going to build this slowly, and I'll get there eventually. But this is where, again, the definition of luck, one of the definitions, is when preparation meets opportunity, right? So luckily I had the experience through 2008, right, where it's almost like I went in and got a degree in real estate investing 101. And I had exactly, but also the experience, right? Because I was doing property management. I learned the game, and I earned kind of my scars, right? So when that opportunity came my way in student housing, I mean, I saw it, and I was like, this is what I need to get into. And so the great thing about student housing at the time at USC is that 200 became 2,000 a property, right? And I was like, so it really kind of was going to fast track my getting out of the rat race. And so I was very fortunate to kind of stumble onto that niche. So that's where you always need a little bit of luck. But at the same time, we had to go out there, and then we had different problems, right? Because we could find these amazing properties, and we knew they were going to cash flow, but they were in terrible condition. And the banks, if you remember at this time, they weren't lending, right? They were, banks weren't lending. So now we had a different problem. We didn't have capital. We didn't have financing, right? So then we had to go out and raise. And so again, this goes back to like that, look, you just got to do whatever it takes kind of mentality. And we were like, well, we have to buy this property. It pencils out. It's a great investment, right? And we said, let's go raise friends and family money. And so we went and we did that. And that's how we were able to buy stuff at that time. So we raised this money, fixed up the property, and then we got the bank financing once we had tenants in place, leases in place, and we just started doing that, one house at a time.
So basically showed them the numbers and said, hey, look, this is what the numbers look like. This is what's different from back then to now. This is basically a great opportunity, and basically use some of their money to help you. The other thing I like about what you said is that whenever you have positive cash flow, it snowballs as well too. Meaning like now you're making $2,000 a month positive cash flow. That's $24,000 in a year. That's $75,000 almost in 3 years. Now you've got another down payment to put into another property. So once you start accumulating all these properties that are cash flowing, it starts to snowball, and like it almost becomes to the point where every couple of years you've got enough to buy another property as well too.
Exactly. And then just to add one more thing, I mean, the other thing that it allowed me to do is I was working at Yahoo at the time. I was making good money. It was a great job. It's like a dream job for most people. I'd go in at 10 a.m., with shorts and flip flops, and it was a chill job. And I was, in tech, you get overpaid. I was getting paid ridiculous amount of money, but I wasn't fulfilled going to that job. I eventually wanted to start something on my own, and what this niche allowed me to do is like, okay, I have this cash flow now, and I've always kept my expenses low. And this is another thing I will definitely advise the younger folks, keep your expenses low, right? Just don't go buy that fancy car, right? So I always bought used cars. I moved in with my girlfriend. I kept my expenses low, and I quit my job. And I said, okay, I don't need a lot of money, so now I can dedicate myself full time to investing. And that's how I was able to kind of kickstart and really move faster as a full time real estate investor.
Well, that's how people get stuck in the rat race. People get stuck in the rat race by like buying that fancy car or leveraging a bunch of stuff. They get their expenses high. Now they want to go do something that will fulfill them, but they can't because they've got all these expenses and now they've got to work it out. So I agree with you 100% in regards to that. I've done the same exact thing. Cars paid off, 0 credit cards, everything's basically real estate. So it's smart.
Awesome.
Now, what advice would you give somebody? Or let me ask you this instead. Now you went into student housing, but now it almost seems like your investment strategy has transitioned as well too. Can you tell us about that?
Well, so what happened is we started in 2009, our student housing business, and it was great, right? It's like going into Nordstrom Rack or, one of these places where everything was on sale, right? Clearance, and no one was around to compete and buy with you, right? I remember those days. So we had our pick of the litter in terms of the properties, and the prices were ridiculous. And so we took pretty good advantage of that environment, and we bought as much as we could. And, we just, again, kind of like Monopoly, we kind of started building those little greenhouses, right? And one at a time. And, but it was all organic. Everything that we were making, we were just putting it right back in. And, to this day, we still do that. So it was kind of the snowball thing you talked about. So that was going well. And then everyone kind of discovered the USC student housing market right around 2015, 16. So we had about 5 years where we really could capitalize. It was USC was really starting to turn around, like the neighborhood, the university. And so it was again, great time to start and to really build it. But then everyone kind of figured out the secret. And so now we had all this competition, and then the market turned, right? So things are more expensive. And so one of the things that we did like 4 years ago is, you always have to kind of shift, right, with the market and the conditions. And I think as an entrepreneur, you need to be nimble. You need to just adjust, constantly, right? And so we noticed things started getting really expensive. So what we did is that they passed the ADU law, right, like in 2018. So we had all these single family homes, and we're like, okay, look, for the next year, we're just going to build on all our single family home lots, ADUs. And that's what we did. So we spent, a couple of years because it was expensive to buy new property, but we had already existing land that we already paid for. And we managed to build about 7 ADUs in a couple of years. And then what changed after that is we started doing ground up development along with ADUs. We did a couple of duplexes here and there. And again, it was a way to kind of optimize the existing land that we had and really optimize the investment that we had by building on land you own already. So we kind of transitioned into that. And I think now where we're going, we're entitling, we assembled 4 lots, and we're going to build a 53 unit, 7-story development. So I think that's really been our trajectory as a business is really buying a lot of stuff cheap and then taking advantage of this ADU law. And now it's like, trying to build because of all the density laws that are changing, right? So now the 4 lots is in a TOC area. And, so the good thing is that we were a little bit ahead. We knew that was kind of coming and changing. And we were like, well, let's take advantage of like the changes in these laws, right? Into zoning. So that's kind of how we transitioned over the last few years.
Not only that, but all that extra cash flow from the ADUs now, basically creates more of the snowball effect, which makes you or allows you to be able to jump into the newer projects. So let's say that somebody wants to basically, it almost seems like you got involved in the ADU right at the beginning. Are there certain people that you follow, or are there certain coaches that allow you to kind of stay in touch? Because I know a lot of people are getting into the ADUs now, but it's already 2021. I mean, you had a head start on it, almost like you had a head start on the student housing as well, too, before a lot of people. So what do you attribute that to?
We try to stay plugged into what's going on to different organizations, groups. In this case, with the ADUs, we have an excellent architect who is kind of, he's really good, and he's always kind of keeping up with all these changes. And he gave us a little bit of a tip on the ADU before it became law. But at the same time, I do listen to a ton of podcasts. You know, I listen to the Real Estate Guys radio podcast is probably the top one. If you're like a new investor or relatively new, it's a great podcast. And they're very big on kind of philosophy and mindset, right? So I feel like they've been very instrumental, and they've been like mentors to me. And so, you know, they really kind of help shape how I'm thinking, and to, you know, be looking for things like that, and get in touch with your local councilman and understand kind of where the puck is going, right? And how laws are changing. And their big thing is like, look, yeah, it doesn't matter if you're Republican or Democrat, right? You just got to know if the people who are coming into power, what are they going to do, and anticipate, you know, those changes that are coming, and just position yourself to take advantage of those things. And I think, so that's how mentality allows us to kind of be plugged into California, what's going on here, you know, the changes with density. You know, the other thing is like, I'm really trained to be a problem solver, right? So look for problems. And in California, we obviously have a housing crisis, right? So knowing that, you know, the reason they passed all these ADU laws and these like higher density laws is because we have a housing crisis, right? So knowing that, what is changing at the government level to help you take advantage of those things, right? And position yourself to take advantage of those opportunities.
That's awesome, man. Good. And then you still own all of the student housing, or are you exchanging any of those properties into like larger projects like duplex, 10plex, 20plex, or anything like that?
Yeah, that's a good question. So the other thing I did fail to mention is that a lot of the properties we bought like 2009, 10, 11, 12, you know, as an investor, you should always be also like an asset manager, right? Always looking at your assets and trying to manage them, and say, okay, the roof's getting old, or, you know, the renovation I did 10 years ago is dated now, right? So you should always be thinking about those things. And one metric that we look at more is like return on equity, right? Because you could be sitting on a lot of equity, but if you're not, there's a point where it makes more sense to take that equity and position it somewhere else via 1031 exchange. And so we started doing asset management and looking at our portfolio and like, look, these properties, they're getting dated, you know, they're a little bit higher risk because they're a little bit outside of the zone at USC. So we decided to sell. We sold probably like 7 in the last 2 or 3 years properties, these older properties. Some of them we built ADUs, so we maximize kind of the value on there, and we've 1031 them into, you know, the bigger assets, 20 unit. We just bought a 23 unit, and then we also 1031 a couple properties into the 53 unit building that we're going to build soon. So we definitely have, you know, we'll continue to look at our assets and say, okay, where does it make sense to kind of reposition your equity to get a bigger bang for your buck?
Yeah. I love the return on equity, because that's what I do for my properties as well too. I talked to a gentleman and he said, I'll never sell my property. And I said, well, I used to think that way. I used to think like, man, I'm going to hold on to these properties forever. And then I realized that like, hey, look, if a better opportunity comes up, why not exchange it into something else? Like if you come across something that will put you in a better position, reduce your risk, increase your cash flow or something like that, or has more room for appreciation, why not exchange them at that level?
Exactly. I think, I used to think that way too when I started. I never wanted to sell a property, right? And
Sure.
a little bit's emotional, right? It's like, oh, this is one of my first properties here. But now it's, and the way I try to tell people is like, you're not really selling it, you're exchanging it for a better
Yeah.
property, right? So that's, yeah.
Yeah. Well, and I think if you stay plugged in as well too, your mind starts to develop and you get access to new information, and that new information causes you to think differently sometimes. Like before, because I started in the single family residences, then I started into duplex, triplex, then I bought a 25 unit apartment, then I bought an 11 unit apartment, and now I'm into that multi-level. But my mind started to change as to not only cash flow, but also tax advantages as well too. So what made you want to get into the larger properties? Like you said that you bought a 21 unit apartment and now you're building something as well too. What made you want to, were there certain tax benefits or something that made you want to get into that?
Yeah, part of it is economies of scale, right? As you know, you can have like a duplex, triplex, fourplex, and you have, 4 roofs, and you have, there's just more maintenance that you have to do. You have more exterior walls. And so when you get like one large apartment building, you get the economies of scale. You have one big roof, right? They tend to be a lot easier to maintain. They're also just, they're easier to finance too, right? I think when we started, we were getting a lot of the smaller kind of Fannie Freddie loans.
Yeah.
And if you do due diligence, I think one thing you'll realize eventually is like you do due diligence on a deal that's a duplex. Doing the due diligence on a 20 unit apartment building is almost the same amount of time, right? So I think as you progress in your career, your time is more valuable, right? So doing the due diligence and all the work it takes to acquire a 2 unit versus a 20 unit, it's almost the same amount, right? So you want to definitely take advantage of your time and maximize it. But I think the key things are just, the economies of scale, just the maintenance and the management's easier, right? And the management's a key part of that. And then just the time it takes to do these bigger deals, it's almost the same as the smaller one. So,
yeah.
Yep.
What is your strategy for finding opportunities? Like, do you work with one broker? Do you work with many brokers? Like, how would you describe that?
We've had a good relationship with one broker who's been in this area. And again, if USC is, you're talking about like 1 square mile. So it's a really small, finite number of properties and of land here.
Yeah.
So you really have to be plugged into this really sub-market. And, because USC is so, there's just so much more competition now. Any property that comes onto the MLS, everyone wants it. And there's so much competition. So we've done a ton of off-market deals where our broker has a relationship with someone who, he maybe sold them that property 20 years ago and they're ready to exit. And we have kind of an arrangement. We get the first right of refusal. And, we try to treat our brokers really well. I mean, we'll give them a bonus, we make sure they're happy, right? Because that's such an important relationship to help you acquire property. So we've always taken care of our brokers. We go above and beyond, just the regular commission. So that's been very important. But we've worked with a couple of brokers, over time, but one has really, because we have a special relationship with them and we take care of them, they've reciprocated that with us, right? So
you guys, basically.
Exactly. So, but at the same time, we're plugged into the neighborhood here, the community. We know a lot of the owners. We've also managed for other owners in the area. So a lot of times those owners have come to us like, hey, we're thinking of selling. Are you interested in buying? So there's some of that. So it's a combination of those things.
Okay, awesome. So one being plugged in. Okay, good.
Mm.
And then the last question I wanted to ask you is for the multi-units, are those in the student housing arena as well too, or and in the USC market, or are those just traditional properties outside of that?
Yeah, we decided to really focus on in student housing at USC. We thought there was a lot of opportunity here, so we've been 100% focused at USC. We bought a few properties at Cal Poly Pomona. We sold those a few years back. We have one property in Berkeley. We're about to sell that one, and 1031 into a property here at USC. So we've really been like laser focused on this niche, and after 10 years, or we can say we're experts in it. So we, you can go wide or you can go deep. I'm a believer in just kind of going deep and building that expertise. And I mean, we know this market and we know the product. I think as good as anyone here. So now the product that we're developing and bringing to the market is just substantially better than what we did 10 years ago, right? So we made a decision to focus. I think it's paid off for us.
Yeah, big time. Yeah, I'm imagining that you're almost to the point where somebody tells you a street and you almost know which house it is, and you already automatically know like almost the value of the property. Like by going in so narrow, you can make a decision like that, where maybe if somebody is from out of the area, they don't know that you can get an extra $200 here, an extra $1,000 there. It's almost like, no, the numbers with certainty, which also allows you to move fast on deals as well too, I would imagine. So
absolutely. No, that happens all the time. People come in and they want to get into USC market. They buy on the wrong street. And, we just know where the college kids want to live and where they don't, and when they will pay a premium to live and vice versa. So absolutely. Yep.
It's funny because I bought the 11 unit in Port Hueneme recently, and the broker was advertising market rents for a 1-bedroom as like $1,350 or $1,200 on the pro forma. And basically I was like, no, that's like way undervalued. So if somebody's looking at the pro forma for the broker and they're like, oh, the rents are only this, and I'm like, that's undervalued because I own a building not too far from there. Like market rents are closer to $1,450 or $1,500. But that market knowledge, that expertise allows you to almost be able to make sense of something that maybe somebody else can't make sense of, because you know that market really well.
Absolutely.
I've enjoyed our time, Carlos. I know that you're a busy guy. Is there anything else that you'd like to add that you think would be beneficial for listeners?
Yeah, I think what I would say is, go back to, look, if a Compton kid like me, immigrant parents can do it. I think anyone can do it. I think real estate has so much opportunity. I love it. There's so many niches you can find. There's so much opportunity. The other thing is you got to have that abundance mentality, right? And there's just so much out there. But I think it's important to have a long-term perspective, to be a problem solver, right? I think if I look back 10 years ago when I started, right, there was a problem that seemed this big, right, bigger than me. I look at the same problem and it's like this small, right? But the problem didn't change. It was like I grew, right, as a person. So those problems become smaller for me. So become a problem solver. That if you're going to become an entrepreneur, you got to be really good at that. And just learn to fail forward is one thing I would like to tell people. There's a book with that same title. That's an amazing book. So I never see a failure as a negative thing. And I tell my daughter the same thing when she's like, I'm sorry, or I'm like, no, don't be sorry. Like it's a learning lesson. It's an opportunity to start over. Right. So yeah, I think 80% is mindset. And if you can, but you got to put a lot of work into it. And if you get that right, I mean, there's nothing you can do.
Yeah, I agree with you, man. I agree with you 100%. It's a lot of it is psychology and being plugged into the right things and kind of feeding your brain with positive things. Like if you're consistently like watching prank YouTube videos versus listening to real estate guys, like whatever you feed into your brain, that's generally what you're going to think about and what you're going to attract. So I'm a big believer on that.
Yeah.
Carlos, if somebody wanted to get a hold of you, like maybe follow you on Instagram, maybe check out some of the properties, where can people find more information about you?
Sure. You can find me on Facebook as Carlos Delherra Delgado. There's only one Carlos Delherra in the world that I know of, so easy to find on Facebook. Our website is Live with Mosaic, LIVE WITHMOSAIC.com is our website. So, or you can email me at carlos@livewithmosaic.com if anyone wants any help or advice. I'm more than happy to do that.
And then you have a book coming up, right? What is the expected release time for that?
It's actually out already. It's called Success Habits of Superachievers. You can find it on Amazon.
Awesome.
So it's a great book. It's a bunch of co-authors, short stories. So yeah, check it out on Amazon.
Yeah, I'll include the link on the video once we produce it. So if you guys are interested in the book, loved his story, check it out. So once again, Jose Luis Morales, episode number 52 of the Morales Group Show. Thanks, Carlos, for being on. We've enjoyed it, and I hope that it added some value to people in one way or another, man. Story is super inspiring.
Thanks, Jose.